All right. Thank you, Robin. Good morning, everybody. I'm Jason Wood. As Robin said, I work with Alberta Agriculture and Forestry. A little bit of background, I guess, about me. I've grew up on a mixed farm out in central Saskatchewan. After that, I went to school for a while. I went to school, did some to university, went and worked for a crop company for quite a few years as their marketing manager. I then went and worked for the government of Saskatchewan doing agribusiness development, and then I came back to university and did my master's at the University of Saskatchewan. After that, I came out to Alberta, and I've been with Alberta Agriculture now for about 5 years. I've been in this current role for about 3 years, and then prior to that, I was doing crop economics with the Alberta with Alberta Agriculture as well. So that's a little bit of background on me. I'm hoping that everybody can hear me well. I'd like to thank Alberta LAM for inviting me to do this webinar, and I'd also like to thank everybody for rescheduling. I'm feeling much better than I was about 3 weeks ago, and I'd like to thank Robin for moderating the session. So we will start here. So as Robin said, I'm just going to go do a LAM market update, and then I'll go through some of the marketing plan options available that might be of use, and then I've also done I guess I can go through the outline here rather than speaking on the front page there. So we're going to do some market factors that are affecting lamb markets right now and that have affected them through the past. Look at sheep inventories both globally and domestically. Then look at supply and demand of lamb and sheep meat. I have 2 slides on feed prices for Alberta. And then I have that market outlook, some slides on seasonality, ethnic markets, and the importance of those ethnic markets and how they affect prices throughout the year, and then that marketing alternatives. And I've ran a couple scenarios on backgrounding lambs and sort of what that, I guess, what that backgrounding of the lambs, whether those margins can be positive or not. So some of the factors that have been affecting lamb markets, this is fairly standard. We're also seeing, the volatility in commodity markets that's affecting cattle and hog prices as well. Co-product or the drop credit values, those continue to struggle, although we're starting to see some improvement in hide values and some of the offal products going into Asia, but that those improvement in prices are very slow. Consumption of lamb remains flat domestically and in the US, but it's also flat globally. It's still, I think we're somewhere around that 1.5 or 1.8 kgs globally is sort of what they estimate. So, and that consumption's been fairly flat. We're seeing increased production of beef, pork, and poultry, and in turn, that's bringing the prices for those competing meats down, so we could see consumption of those increase. Cold storage is up in Canada for lamb, but I don't think that's really an issue. We'll get to that. And then production growth remains flat domestically, and that's just that we're not seeing the expansion in the flock. And then demand, is remaining strong, and that's a characteristic of the amount of supply that we have, I think, as well. So this slide here is just goes from 2000 up to 2017, and this is the estimated slaughter lamb, 120-pound slaughter lamb price for Alberta. So you can see that, since about 2004, we've been on a fairly constant upward trend outside of 2013. So in 2003, we had the BSE incident that brought lamb prices down quite dramatically. We recovered, then we had high feed costs. We had some of those factors. That's part of the renewable fuel standards in the US with corn. So it created a little bit of shakiness there. It kind of brought the price down a little bit. Then we had the economic meltdown in 2009. It didn't really affect lamb markets too much. We had a little bit of a pullback in prices, but it recovered quite quickly. Then once we get into 2012 and 13, we had drought in the US, drought in Australia. That increased culling. We saw that we also had, domestically, we had more slaughter lambs, more meat available. We ended up in an oversupply situation. Demand was a little bit weaker than expected. And then we also saw hide values kind of decrease a little bit in 2012, and that really hit lamb prices quite hard here in Alberta. After that, going into 2014, we had PEDV in hogs. That hit the hog production quite hard. We had avian flu, which was quite widespread in the US, which really affected the amount of poultry meat available. And then we had low beef numbers. So we had those three events kind of combine in 2014, and that really pulled lamb prices up through 2014 and into 2015. We saw some increasing imports from Australia during that time, but those imports, the Australian imports, have kind of started to decrease into Canada in 2016. We're seeing a little bit of increase from New Zealand, but that'll come up later. We saw byproduct values went flat, and then it really decreased. Those values really decreased again. That kind of affected lamb prices. We've got, as I mentioned, competing meats. That production is up. We've got increasing global meat supplies, but with all that, we still have strong domestic demand, which is a factor, and then also that limited production. So that's really helping support lamb prices here in Alberta, and then, more or less across Canada as well. And then this chart here, I just wanted to do a comparison to show, at the Alberta level where slaughter lamb is in relation to slaughter steer, and then also slaughter hog prices or hog prices in general. So you can see how we had that, BSE and then 2003 lamb prices, and then all through 2014-15 prices really increased. Hogs came back down much faster just because of their ability to ramp up production quicker in response to the PEDV disease outbreak. But you can see how cattle prices fell about 35% in 2015-16. Hogs actually decreased 50%, and lambs came down about 25% there, but lambs have actually regained all of that, and they've had a little bit of softness here at the end of 2016, but cattle only moved up 21% and hogs only moved up 38%. So I just kind of wanted to give a way, I guess, to see where we are compared to some of the other livestock prices within Alberta. So this, of course, increased farm cash receipts. This only goes for annual data to 2015. The quarter for 2016 hasn't been released, but I'll talk about that a little bit. In Alberta, we saw that farm cash receipts were up 37% for lamb and sheep in 2015, and Canada overall was up 16%. When I looked at the first 3 quarters of 2016 for Alberta, those lamb receipts are down about 3.5% from the first 3 quarters of 2015, but when you look back at sort of a 5-year average, we're still 28% higher. So lamb receipts are still doing quite well, and will likely overall be down marginally in 2016. And that's just part of that softer prices at the end of 2016. And then I guess to a certain extent, without expansion, there's less production. So that will also play into those farm cash receipts. So now if we look at sheep inventories and supply, you can see for world sheep, since about 2002 we've increased. This only goes up to 2014. The data from FAO wasn't available after that, but we've been increasing about 15.5%, but most of that increase has been taking place in countries that aren't heavy exporters. So we've seen increasing in Asia, specifically China, and then also into Africa. But our inventories are down in Europe, Oceania, Australia, New Zealand, and then the Americas. It's interesting to point out, you can see in the 90s when wool prices crashed, it really brought sheep prices down, and then we also saw that transition as some producers moved into cattle. And then also the effect of drought there in 2009 and 10, you can see how that pulled inventories down as well. So looking at some of the global inventory, or breaking it down, I guess, into some of the selected inventories. So on the on the left-hand side is the scale or the numbers for United States, Australia, New Zealand, and then I have on the right-hand side Canada. And you can see that over time, we've had the U.S. has gone from about 33 million sheep back in 61 down to 5.3 million in 2016. So that's, that's over an 80% decrease in their flock. Both New Zealand and Australia are down about 60% from 1970. So there's, Australia's, sheep flock is down about 110 million head. We've got the same, about 40 million less in New Zealand. In Canada, we were increasing during that time, but then since 2004, sort of after BSE, our numbers have declined about 17% since 2004. When we look at the January 1 estimates, those ones haven't been released yet, but for Canada, it kind of looks like we'll be down maybe about 1%, a little over 1%. The US is reportedly down 2% for January 1st, 2017. New Zealand was looking at, their estimates were for about a 0.5% increase in their flock, and then Australia was projected to be up about 1.4%, but they have some ongoing drought issues there. The rains haven't come as expected, and so they may not see that expansion as high as they had anticipated. Provincial inventories in Canada. You can see the three largest provinces are Ontario, Quebec, and Alberta. One of the interesting things that's happened when I looked at some of the census data here is that sheep farms, have marginally declined, but haven't seen as big of an increase in the cattle. But for the number of sheep per farm is almost doubled. It's gone from 64 on average in '86 to 110 in 2011. So it'll be interesting to see how those numbers come out when the 2016 census starts coming out in May here. The other thing I wanted to mention is that the Statistics Canada is supposed to release or scheduled to release the January 1 estimates tomorrow, so it'll be good to see where those numbers are at. This is a breakdown from 2004 to 2016. I just kind of wanted to see where sheep populations have gone provincially. So you can see for Canada, we're down that 17%. Outside of Prince Edward Island and Nova Scotia, all of the other provinces are down. In the West, we're down over 20% in our sheep numbers in that 12-year period. And then we've also seen declines in Quebec of about 17-18% and about 9% in Ontario. Getting closer to home here for Alberta, this just is our breeding stock, or our ewe population. We've stayed pretty constant over the last 5-6 years. We've had some declines, but relatively constant. We're still down about 38,000, or 38,000. We're still down 38% from 2004. So last year we had about 135,000. And then if we have a little bit more of a decline, we'll bring those ewe numbers will be down a bit more. Total sheep is 135,000, and we've got about 86,000 ewes in the province. You can see the retention of lambs for breeding hasn't really gone into an area where we would expect to see the flock expand. We're still running about that 13-14% of retained lambs. If we can see that number increase into the 18 or 20-22% range, then we could see expansion. I'm not sure if that's going to happen. This is the same situation we're also seeing in the cattle herd, is that cattle inventories also are not expanding in Alberta as well. So now I'm going to move on and talk about slaughter. I've broken the slaughter statistics down into provincially inspected and then federally inspected next. You can see that on average, Western Canada over the last 5 years has slaughtered about 12% of the provincial inspected slaughter. The majority of provincially inspected slaughter takes place in Ontario. But the West, we've been increasing. Between 2000 and 2016, we've almost doubled our share of provincially inspected slaughter. We're up at about 12.5% in 2016 of the total. So last year, in Canada, provincially inspected slaughter was just over 361,000 head. That's down about 6.5% from 2015, and then we're also down about 5% for the national number, down about 5% from the 5-year average. And what's interesting is that provincially inspected slaughter is down, but then we've seen more federally inspected slaughter taking place. So And then when we compare, just breaking it down between East and West, the West was down last year about 5.5%, and the East was down about 6.5% from 2015. On the federal side, you can see that the West has been increasing with our plant here, so that last year we had about 54% of the total federally inspected slaughter in the West, and since 2009 we've gone from 38% share to 54% of total federally inspected slaughter. What we see here as well is that we are up about 8% for total year-over-year federally inspected slaughter. So we had that 6.5% decline. Provincially, we had an 8% increase in the federal side. The federal numbers are, of course, smaller. Federally, the reported numbers for federal inspected slaughter was 179,000 head in 2016. That's higher, what I said there stated before. And then when you break it down between West and East, in the East we saw in the West we saw quite a dramatic increase of about 24% year over year, whereas in the East we saw a decline of about 6.5%. And then we're looking at the first month here of 2017, we're up about 1% over last year and about 6% over the 5-year average. So we're continuing to slaughter to meet that demand. The prices are staying stable, so it's encouraging that slaughter to, and then with decreasing imports, there's also that demand there from the consumer to have more lamb. On the live sheep export side, we were up in 2016. We had about 14,000 head reported exported, but we're a long way off where we were prior to BSE in 2003. And my take is those ongoing country of origin labeling regulations or rules that still apply to sheep continues to hamper our ability to export live sheep. Just that additional cost of bringing sheep down for segregation down into the U.S. market. And I have a slide later on that kind of tries to do a cash-to-cash comparison between Alberta and the U.S. And you kind of see, I'll talk about that later on, you can kind of see how that cash-to-cash spread has widened since 2003. Our imports from the U.S. were nil last year. Even though we've got a weaker dollar, which should be conducive to importing, is not conducive to importing. We didn't import any sheep, or at least it wasn't. Statistics Canada didn't report any imports last year. So the other thing is that we've got tightness in the U.S. market, so that tightness is also limiting the ability of them to export sheep to Canada. And then also imports are declining in the U.S. as well, so they still have to serve their domestic market. So now on to the lamb supply and demand situation. When we look at total Canadian lamb meat, so this is a total production and imports, we can see that since 2004, production in Canada has been pretty flat. We're actually about 4% lower than we were, from 2005 to 2015. I looked at, we're about 4% lower. But what's interesting is that our production's decreased 14%, but in that same time period, we've saw that our Canadian total sheep numbers have declined 17%. So even though we've had a greater decline in our flock number, we've continually been able to increase our cold carcass weight, which has, helped reduce some of those, or at least keep production stable, even though flock numbers have been declining. But that's not a situation that can go on forever. On the import side, I've estimated that imports, are down about 3% from 2016. Most of that comes out of New Zealand and decreases out of New Zealand and the U.S. And then, as I mentioned previously, we had a small increase from Australia. So yeah, just to make that point that we saw, that total slaughter was down in 2016 about 2%, but our production is only marginally down in 2016, 0.3%. So, those carcass weights and the efficiencies that we're seeing there are helping keep production fairly stable. Looking at carcass weight, you can see that we've increased about 5 kilograms from 81 to 2015. So that's about 11 pounds. That 28.5% increase during that time. And if we look at compare 2015, the number of sheep that we slaughtered in 2015, and use the carcass weight of 23 kilos in 2015, and compare those same number of sheep that would have been slaughtered in 81 when our carcass weight was below 19 or around 18.5 kilos, that roughly works out to about an additional 3.7 million kilograms of lamb that's been added to the supply chain just from increasing our carcass weight. On the import side, as I mentioned, imports were down in 2016 about 3% from 2015, even though the lower dollar, this is my point that I got confused on earlier, lower dollar means that we have more expensive imports. That's one of the reasons, but then we're also seeing that imports are just decreasing based on lower sheep numbers from Australia and New Zealand. And also Australia and New Zealand are focusing on the Asian market as well. But our imports into Canada from New Zealand were down 13%. From the US, they were down 10% in 2016. And then we had a small 2.5% increase from Australia. When we look on the export side, our exports were also down in 2016. You can see in 2013 we had a large number of exports, and that was in regards to that earlier slide where I talked about we had increasing supplies in 2012, lamb prices were falling, a number of factors there that coincided to really push the market down. We ended up in an oversupply situation, so then we were able to increase our exports in 2013. The dollar was also starting to fall then, and that really played into increasing that number. Unfortunately, that number then, if you want to look at averages, that really kind of skews the 5-year average, so it looks like, we're 30% below the 5-year average in 2016, but 2013 was kind of a one-off year. For 2017, the anticipation is that exports will remain tight, and that's just in regards to the tightness in the sheep supply numbers. So when we look at the Canadian Meat Index, this is the price index for competing meats, I guess. We've got beef, pork, chicken. Lamb isn't specified on its own. Lamb is specified as lamb and other meats, so take that into consideration when you're looking at these numbers. You can see that beef has really started to come down in late 2015 and then all through 2016. Pork has started to give up some ground as well, but chicken has remained going higher, and then also lamb has recovered here in late 2016 and into 2017. One of the things that we'll have to watch is that the decrease in beef prices, we've also got increasing beef production and pork production, and there's a lot more featuring going on at the retail level for those two products, is that could creep in and affect the demand for lamb as consumers substitute it'll be enough to offset that those lower competing meat prices. When we look at the Montreal wholesale price, this is just some data just to try and get a feel for what's happening in Canada at the wholesale level. You can see that 2015 lamb peaked as well with the other competing meats, or with beef, pork there, to a lesser extent poultry. And then, when we look at these numbers here, Western choice, fresh choice lambs out of Western Canada are up about 72%. Quebec lambs are up about 86%. And then coming into 2015, those prices peaked. We saw them come down in 2016, and that part of that would be the decline in co-product values during that time as well. Although we're starting to see, as I mentioned previously, those values are increasing. So you can see in 2017 there's been a slight increase in prices over 2016. And then in the short term, we'll see that we're having those slower imports, and then we've also got the upcoming holidays of Easter, and that'll help keep prices well supported here in the short term. Comparing our wholesale price to the U.S., when you look at the U.S. wholesale lamb carcass price, and I converted that into a Canadian dollar equivalent on a kilogram basis, their price in the 2016 averaged $9.60. I'll just repeat that. I guess the audio connection kind of faded out there. For the U.S., there on their wholesale lamb carcass price for 2016, it averaged about $9.65 a kilogram in Canadian dollars. Our prices here are much more, or I guess we've got higher prices here in Canada, which is a good sign of demand for our lamb here. On the consumption side, I've kind of...
The broadcast is now starting. All attendees are in listen-only mode.
Can you guys, I'm assuming everybody can still hear me here. I'm not sure when the audio dropped out. I guess I'll just go back over the wholesale price here. A few quick points on this was that, comparing to the U.S., our wholesale prices are much higher, about $3 a kilogram higher. The U.S. is about $9.65 a kilogram in Canadian dollars in 2016, and that will likely see prices well supported here into quarter one and quarter two as we see the upcoming holidays around Easter, and then also getting into some of the Islamic holidays around Ramadan and going forward. On the consumption side, we can see that I've alluded to this a little bit previously. Our consumption has remained fairly constant here over the last few years. For 2016, I've estimated it around just slightly down, about 1% from 2015 at just over a kilogram, 1.04 kgs. And it's interesting to see that, that even with that increase in price, we've still maintained that consumption levels. So that's we're down about 2.5% in 2016, but that decrease in consumption I think is more attributed just to the supply situation. One thing that's interesting is that we've come down quite a bit from where we were in the 60s. We're down about 34% from the 60s, and a lot of that's as I said, just comes into the increase in consumption of chicken and beef and pork during that time. Although beef consumption is down, but chicken consumption has really increased during that time, and that's really affected lamb and also beef and pork consumption. So here's the meat consumption comparing lamb to the others. Lamb looks like it's been fairly flat, as you can see along the bottom line there, but still, since '87, we've increased lamb consumption about 17%. During that same time, beef has dropped off 33%, pork's down 25%, and there's chicken. Chicken's up 50%. I think the cost of chicken mixed with the ease of, or what's been discussed with me, the ease of cooking and the ability that it can be, used in so many different configurations is one of the reasons why chicken has become has been increasing in consumption and also availability. This chart just looks at is an estimate of where demand is going in relation to price increases. So you can see that what's interesting is that prices of, when we compare 2011 to 2016, prices are up an average about 9%, but consumption's only decreased about 3%, or demand's only increased about 3%. So what with this slide is, it's a very good thing that we're seeing that demand is remaining very strong in Canada. Even with the higher prices, our demand is quite constant and quite strong. And we're also seeing this to a certain extent. We've talked a little bit about this in beef, but that demand is a very good thing to see. When we look at 2015, just on the supply side, just to get back to that, we're still only supplying about 45% of our total consumption in Canada. So, but yes, demand is remaining very strong. I'd mentioned earlier about cold storage stocks here in Canada. You can see in 2012, 13 there, or going into 2012, they were quite high based off what was happening there in the lamb market when we had oversupply. Lower prices really cleaned that out in 2013. Since then, we've been increasing, but I don't think this is really going to be too much of an issue. I think with decreasing imports and then the tightening supply situation domestically here, that these cold storage stocks will stay, will not be an issue, and that it'll be a good place to pull some supply from throughout 2017. On average, between 2005 and 2016, when you look at this, they've increased about 4% per year. But I think that a lot of that increase has been in the last 2 years, and I think we'll see that come down as we move through 2017. So on to feed prices here. These feed prices, Southern Alberta feed grain prices, you can see that prices continue to move down. That's just, the outcome of our late harvest year that really affected quality last fall. We can see that from last fall to current here in February, our prices for feed, wheat, and barley are down about 5%. And if we look on a year-to-date basis, so we take January, Feb 2017 and compare that to January, Feb of 2016, barley prices are down, feed barley prices are down about 22%, wheat's down 20%, peas are down 8%, canola meal is up about 25%, but we really see overall that feed prices are down quite a bit. They're staying down. They're not showing much sign of increasing at this time, and that's really beneficial on the cost side for feeding out lambs. And when we look at forage, one caveat I'll mention here on the forage side is that I've been asked this a number of times, is where can I find 5-6 cent good quality hay? I'm not sure where you can find that. This is just an average for Alberta, and what I use this chart for is more of an indication of where hay prices are going. I know good quality hay prices are in that 10 to 15 cent range for what's being offered out there for sale right now, but it's an indication of where prices are going. So we had that spike last year in 2015, but the mild winter in 2017 has really, I guess to a certain extent, demand hasn't pushed those prices higher, and we see them continuing to come down. So we'll see what happens here going forward. But prices were down about 7% from 2016. But when I look back at using the 5-year average, we're really we're still 22% above that 5-year average. But that 5-year average takes back into prices going back those lows back into 2012 and 13. So but overall hay prices are it doesn't look like there's going to be any shock here for hay prices moving forward. And then we should see that as we move into the summer, grazing conditions, moisture conditions look reasonable through most of the province. But we'll see. We still have a few more months before we're there. We'll see what happens. But we shouldn't. It's unlikely that we should see any increase in feed grain or forage prices before the summer. So when we look at the market outlook here, as I've mentioned quite a few times about the dollar, you can see that it's been declining since 2013. We're up here a bit, about 75 cents seems to be where we've been sitting for the last 8-9 months. And this is just, that this lower dollar is again supportive on the import side. It keeps those import prices up, which supports our domestic market. This is annual value per head numbers for slaughter lambs, and I just wanted to show this. I've listed all the provinces here. It's a bit of a messy chart, but what I wanted to show is just sort of the variability across the provinces, but then also looking at how much lamb prices have come up, especially when you look in the last decade between 2006 and 2016. When we just look at Canada, we've seen over a 60% increase in the price of a slaughter lamb. And if we look back over the last 30 years, that lamb price at the Canadian level has gone up 125%. So, and a lot of that increase in the last 10 years. Ontario, on average, had the highest price for slaughter lambs in 2016, followed by Alberta. And I think over the last decade, a lot of the push on the lamb price has been, through our changing demographics. We have increasing immigration, and that is looking into, that is demanding that lamb. So I just wanted to compare the top 3 lamb producing provinces, and that was, Ontario, Quebec, and Alberta. And as I said, Ontario seems to have the highest price on average. And in 2016, they averaged 29% higher than Alberta, 37% higher than Quebec. I'm not sure how to explain the difference between Ontario and Quebec, but when I look at Alberta, I would maybe, some of that would go onto that transportation differential if we wanted to deliver lambs out there for slaughter, or even delivering feeder lambs out there. So when we look at Alberta here, you can see that red line there with the triangles, that's 2017. You can see we've been pretty steady, around 225 ahead. We're 12% above last year. We're pretty much on par with 2015, and we're 21% above the 5-year average. One thing that's interesting is that if you look back to 2014, our prices right now are 43% above where they were in 2014. So we've really been able to maintain a steady price, and you can see that price has been maintained for the last couple of years. Has been pretty stable. So on the ethnic side, these are just some of the holidays. I just took a quick. I just made a short list here. There's some more holidays as well that would affect demand, but this just shows when those holidays roughly happen when they happen in 2017, the month, and then also the type of lamb that's generally demanded at that time. When you look at demand from our increasing Muslim population, there's over roughly right now, the number I was given was about 1 million in Canada. That population is increasing, and that really is increasing the demand for lambs this year, which would be those 60 to 80 pound lambs for May, June, and then again in September. One of the issues with ethnic holiday demand is that it creates issues in the supply chain because these holidays are never on the same day every year. When you look at the Islamic holidays, they follow the Julian calendar, which means those holidays float backwards 11 days each year. So as those holidays float backwards, it puts demand situations at times of the year when we're generally not, which I guess traditionally hasn't come at that time. And then that also can coincide with other, holiday demands such as Easter or something. So one thing I want to get across here is that, it's strongly encourage producers to be aware of when these holidays are happening during the year, because it can give you an opportunity to take advantage of these increased demand times and maybe market your lambs then and increase your margins. There could be some opportunity that that exists there. I did take a look at, for instance, Ramadan going back to 1999. I kind of looked at prices because we want fresh lamb, kind of that 4 weeks in advance, 3 to 4 weeks in advance, and 3 to 4 weeks after the holiday. And it was fairly consistent, especially in recent years, that we saw prices really increase in that time and then decrease. And that was just that demand for that fresh lamb. When we look at the seasonal price effect here, you can see the 10-year average is the orange bars, and then the blue bars are the 5-year average. And you can see how the price, seasonal price impact has been changing as we see more of this ethnic demand coming into the market. This is Alberta prices. I didn't do this for Canada, but it's Alberta. One thing I want to mention, though, is that it's not on here, but I did look at 2016 for Alberta, and I found out that the seasonal price actually was contra-seasonal. So, typically the price goes down in the summer, and I found in 2016 the price actually increased in the summer. And some of that might be, going back and looking at these at this holiday schedule, might have been that demand in June for lambs at that time, and then again in September. Slaughter seasonality. This is only federally inspected slaughter for Western Canada. So you can see those big slaughter times are again Easter and Christmas, and then with smaller demand increases in June and September. So being aware of when the lambs need to be ready, it may be an opportunity, if possible, to change lambing schedules or something to take advantage of when the demand will increase. I did not do this for provincially inspected slaughter. That's something that I should do because we might see a difference as well with the provincially inspected slaughter seasonality. So that's something that I also need to look at. So now I'm going to move on, and I've mentioned this cash to cash spread. This should only be used as a point of reference. Why I use San Angelino, Texas is because the USDA offers a forward lamb price for that location. So I collected data going back to 1990, and I kind of looked at the price spread in there. This is where you can see in 2003 after BSE, that price spread, before, we were fairly close, and after that, the price spread really widened quite a bit between Alberta and Texas. So, but again, this is just a point of reference. I did use this cash-to-cash spread to kind of give an idea of where lamb prices are going to be for 2017, and you can see that in this slide here. When I look at the projected USDA price for Texas, and then I take the forward-looking Canadian dollar futures for those specific quarters, and then I did an average 5-year spread over the last 5 years for that cash-to-cash spread, and it kind of gives a rough idea. So we're seeing, and where we look at where we are right now for Q1 in 2017 in Alberta, we're at, we're averaging around 225. This was suggesting 204. And then a small increase into Q2 and 3, and then again decreasing into Q4. One thing I've kind of been thinking about here is that, and it's something that we see quite a bit in the cattle market, is that, we've got a tightening supply situation here. So it's almost like, we've got a strong, I guess, basis here in the lamb market as well, and it's trying to keep those lambs here. So, at 225. This is just sort of an indication that prices here, that the demand is there for good quality slaughter lambs and also for feeder lambs. But again, I just want to reiterate that this is just for estimation purposes only. This is something that I do, and just to give an indication of where the Alberta market might be going. We look at marketing alternatives. So here we've got things like, you can take your animals to the traditional auction. We've got farm direct sales, on-farm marketing. We can do direct sales of feeder lambs into the feedlot, or we can retain them and feed them out ourselves. Some considerations there is, do you have the facility labor? What's your risk tolerance, cash flow needs, and then, of course, tax considerations. I'm going to put on my cost of production hat here for a minute. Budgets are very important. Knowing your break even is very important for for making your decisions. What is that price going to be? What sale price do you need to break even? And can you lock in a positive margin? Some of the factors to consider would be the purchase price of that feeder lamb, of course, what feed costs are, what's your feeding efficiency, the sale price, interest rates, health issues, and of course yardage. So the scenario that I ran here, I ran two scenarios. One was a 3/4 of a pound gain per day, and another one where we were only gaining 1/2 pound per day. So if we look at, if we take a 75-pound lamb, we're going to feed it out to 125 pounds. So I looked at some of the auction mart data for the last couple of weeks, and I was able to see that 75-pound lambs or feeder lambs were averaging, for a good quality lamb was averaging in that $1.90. That's might be a little bit on the high end, but that gives us a purchase price of $143 for that lamb. The numbers that I ran for cost of gain, so this included barley, forage, and minerals, was about $24 for those 67 days, about 36 cents per day per head. So that gives us a gross margin of $45. When we're looking back at those projected prices that I'd done for Q2, we were in that $212 range. So that gives about $45. We've got, I estimated about $20 for overhead costs. That's for vet and medicine, including some death loss in there, and then yardage costs for $8. Yardage will vary from operation to operation. This is an estimate that I've taken from some cost of production information that was available to me. So that on this 3/4 of a pound gain per day, we've got a estimated net margin of $17. So that gives us our break-even price of $195, which seems pretty good. One thing, I guess I'll get to this point here later on. When we're feeding them over 100 days, we suddenly see that our estimated net margin drops down to $1. And that's just on higher costs for yardage. They're in the yard. They're on feed longer, and our yardage costs increase as well. We may also see some marginal costs or increase in death loss and stuff, but I kept those costs constant at $20 between the two. So our cost of gain between these two scenarios, if we're feeding out at 3/4 of a pound, it costs us about 46 cents a pound to gain. 47 cents a pound, and 70 cents a pound when we're feeding out over 100 days at 1/2 pound gain. Graphically, you can see here that on 67 days, our estimated break-even market price, what we need is, in that one, just between $100 and $195. Scenario B, I didn't present these, but I ran a scenario where feed costs increased slightly. Just a marginal increase in feed costs. If your feeding efficiency is good, you're able to feed them out 3/4 of a pound per day. It doesn't really affect your net margin. It's a few dollars, but when you're in a tight margin situation, if you're only gaining 1/2 pound a day, it can quickly turn into an estimated negative margin as your costs exceed what the market price is. So in here, knowing your cost of production is really important, and I just want to note that, while I've included yardage and debt loss, health issues or veterinary costs, this doesn't include any costs for labor, utilities, depreciation, or interest costs, things like that. That's not included in these. So those other overhead costs are still need to be considered as well in these scenarios. On the margin side, you can see that on the shorter feeding, margins are still positive, which can contribute to those other overhead costs. But on the longer feeding schedule, we actually end up with, that small increase push us into that negative territory on the margin side. So the other thing I wanted to go through, and this is something I believe if I remember correctly, that I did in an article that went out into the Alberta Lamb newsletter. Just some of the grading factors to be aware of if you're going to be selling finished lambs. Now this is for, just this is for illustration or estimation illustration purposes only. And this was, what this shows is that some of the characteristics that, a buyer is going to be looking for. So, and these numbers are numbers that I just put down here, for the base price. That's just a number that I put down for calculation ease. But these other, premiums and discounts are actually pulled from the buyer's website. So you can see that, if you hit spec dead on, you're in the carcass weight range, your fat measurement is good, you've got a clean animal delivered, you get a nice premium. You end up, your price received is 22 cents higher than the base price. That same animal comes in, it's overweight, it's fatty, it's dirty, you actually end up losing about 38 cents an animal. So, just that difference in delivering a good quality animal compared to delivering a poor quality animal in this example leads to about $35 per head that you're losing at delivery. So really watching those grading factors and some of those specs that the buyer wants are really important to your bottom line. So in summary, lamb prices look like they're going to remain stable here in Alberta through 2017, just on tight supplies and limited growth. We've got, this was from a global study that looked at moving forward that, they're kind of estimating that producer prices globally are going to increase about 5% per year, and citing some of those same concerns on tightness of supply and limited growth in the flocks. There is the potential in those examples that I did for positive margins on feeding lambs, but it still needs to be considered what's best for your operation, and looking at the different profitability between feeding a lamb out or just selling a feeder into a feedlot. That might provide a greater profit situation for you. So really knowing those marketing options for your operation. Chinese demand is going to continue to increase. They're the largest importer in the world of lamb. They're going to continue to demand a lot of lamb. We're going to continue to see, maybe some small flock increases, if Australia is able to do that. But, most of the major exporters, we're seeing decreases in the flock supplies. We're going to continue to see increases in production for pork and beef and poultry, and that's going to really have an effect on limiting what our lamb prices are going to, how far we can push that lamb price up. We've got some new trade agreements coming online with CETA, and then I just put in there the U.S. as unknowns. It, depending on what the administration does there, could really have an impact on things like NAFTA, or if they bring in a border adjustment tax, that could have effects on our livestock industry here. So those unknowns, we'll wait to see how that plays out. These are some resources here. As Robin mentioned, Alberta Lamb has some great resources on their website. Agriculture and Forestry, we put out a weekly livestock review that you can download, and it'll have various lamb prices on there. There's also Agriculture and Agri-Food Canada red meat reports, and then we've got the Alberta Agricultural Marketing Manual that goes through a lot of the goes through some of the things that I've talked about in this presentation. And that's it. I'll open it up to questions. Thank you guys for listening to me speak to you on the lamb market.